Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of Euro USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the hourly chart, 1 hour chart of euro dollar in front of us. And after CPI, we got to see some crazy moves. But yes, our levels also work. Usually, I always suggest you guys that when news comes up, try to follow the trend of the market. But yesterday, we discussed about the possibility of our levels working out. And yes, our levels work. We saw Euro USD hitting the level of 1.082022, and we also saw that market faced some selling pressure and came down. Right now we can see that Euro USD is standing at 1.0788. This is the current market price of Euro dollar. And as expected, yesterday we got to see price rejections because we knew it very well that market has already digested the news, as a result of which we were not expecting a trending market. And today also we can expect the same, because if you look at the chart of DXY US dollar index, we can see that US dollar index is still respecting the support of 103, and there's a high chance that market will try its best. DXY will try its best to sustain above the support of 103 or the 200 moving average here. In case market shows some red candle also, I'm quite hopeful, not hopeful, I'm quite positive that DXY will more or less maintain the present structure of the market here. And if you look at the news, where you can see dollar droops as bets built for Fed pause after unexpectedly soft US inflation data cemented the view that the Federal Reserve will skip an interest rate hike later in the day. Usually, this type of news is not very positive for DXY. Usually, after this kind of news, we get to see a drop on the index, as a result of which we get to see upside green candles on the chart of Euro USD. But market is more or less ready for pause in the interest rate hike, as a result of which if DXY drops also today, there's a good chance that just like yesterday, we will get to see some price rejection from below. The support levels for today after news are 102.75, 102.25. I think that market will be respecting these two levels, because if the news comes out just like the expectation, then obviously market has already digested the news, and high chance that we will get to see price rejection from below, because charts speak sometimes before the news. And if we look at the chart here, we can see a wedge pattern. Wedge pattern is a trend reversal pattern. So after news, there's a chance, I won't say a high chance because I'm not an expert, okay, I'm just a trader, okay, there's a chance that we may get to see upside on DXY as well. And if you look at chart prime, then we can see that the signals generated by chart prime have done pretty well, and it's still doing an awesome job. And you can see that the chart prime looks pretty different because the chart prime team has improved the tool and brought some amazing new features. You can see this is a wave here. The wave tells us about the range of the market and the concentration of buyers and sellers. And on the middle of the chart, you can see some gray color lines, black lines. They do not look very impressive, but they are pretty awesome. They are the dynamic support and resistances, so that you don't need to use moving averages. They tell you about the dynamic support resistances in the live market. Then they have also launched the trend assistant, the green line here, the red line here. It tells you about the trend of the market, so then you don't mess with the trend. And you can see the oscillator is still there, but they have improved the oscillator and it has become the Oscillator Pro right now. Apart from telling us about the overbought and oversold levels, it also marks the divergences. So if you trade on divergence, you don't need to worry because the tool will do the job for you. And if you trade on smart money, then they also have the Market Dynamics Pro. You can see how beautifully the tool marks the levels for you. This is a change of character, break of structure, and yes, they also have an inbuilt chart pattern detection. So it doesn't matter whether you are just looking for signals or you are just trying to improve your trading, okay, the tool will be a big help for you. Right now you can see the chart prime is giving a 30% off if you use the link in the description, or you can scan the code on the screen as well. On their website, they also have tutorial videos, they also have strategies, they also conduct weekly classes. Join their Discord server to find out all the details, and don't forget to check out their link in the description or scan the QR code on the screen. So we are back to the chart of euro dollar here, and right now we can see that euro dollar is standing at 1.0790. This is the current market price here, and the level is the previous resistance working as support right now. So the previous resistance is working as support right now, and you can see that for the last couple of hours, almost 8 to 10 hours, the market is not moving. If you already have taken a buy position, be on the trade, no need to exit. But sadly, the market is not moving much. So during the day, if you see market dropping, if you see the market is going down, do not take a sell position immediately. And the reason is that we can see the overall trend of the market is still pretty much towards the upside. If we look at the ratio of buyers and sellers, still the ratio of buyers or number of buyers are quite high in comparison to the number of sellers. So as a result, do not take a sell position if euro dollar breaks this level here. High chance that before FOMC, if euro USD falls also, it will try to take support around 1.0770, 1.076 at around this level. High chance that around the 100 moving average here, euro USD will get the required support and it will bounce. And after FOMC, if euro USD starts falling, observe the market around 1.0738 to 1.073, around this level. Okay, this is a support zone, 1.0738 to 1.0730. After FOMC, if you see market dropping, you can expect this level to work as the next immediate support for the market. If there is not much extreme selling pressure, if you see the selling pressure is just like yesterday, then you can expect 1.073835 to work as the next support. But as the present trend of the market is still looks towards the upside, as a result of which, before FOMC, if euro USD drops also, we should be looking for buy around the dynamic support of 1.0765. These are the two levels on the chart of euro USD if it falls. On the other hand, if we see upside on the chart of euro USD, then before FOMC, listen to me carefully, before FOMC, observe the market around this area. This area means yesterday's high. Yesterday's high is 1.0821. So as there is not much volatility in the market, we can expect yesterday's high to act as the resistance, because for a breakout or breakdown, volume is extremely important. And today, as we can see, there is not much volume in the market, so we can expect that market will face some selling pressure around this area. If market shows price rejection from above, if market struggles around this area, we can also look for a sell around 1.0821. okay, and we also have a 200 moving average. Let me show you. Yeah, we also have a 200 moving average coming down. So around 1.0821, around 1.0830, the 200 moving average will also be present by the European session. Okay, so this is a resistance zone in the market, and I'm quite hopeful that before FOMC, if euro USD tries to recover also, there will be some selling pressure, and as if market reverses according to expectation, we can look for a sell. Okay, and we have a good resistance around 1.0866. We have derived the resistance from the Fibonacci tool here. I have already shown on Saturday. So around 1.066, yes, I don't think so that before the FOMC market will be hitting the level. Market does not have the strength right now to go up to the level, but after FOMC, you can look. If market goes up, you can expect some sort of selling pressure around this area. Yesterday also we were not very confident about this level, but still it worked. Today also we are not very confident, but there's a chance that it may work if the volatility of the market is not very extreme. So volatility of the market, like always, will play a dominant At the beginning of the video, as I said, that there's a high chance that market will not be responding to the news very well, and the reason is the market has digested the news. This is just my assumption, so okay, be careful. Do not trade blindly, because I am also a trader like you. Follow proper risk management. Do not gamble with your hard-earned money. In case you see that the market is trending after the news, then obviously you should follow the trend of the market. Whatever you do, do not gamble. Okay, bye bye, take care.